Hi friends, this is Bank Nifty 5 minutes chart. Based on yesterday's video, we expected that the price will take off from this zone, but unfortunately price reversed and our hustle is hit the very first candle itself. Okay, and then market was very volatile and very unpredictable. So let me show you how the market pattern has been today. Let me first draw the lines that market has formed this morning, the whole day, and see how we can trade such things. There was a video wherein I posted earlier that we should avoid trading such irregular pattern markets. So we refer to such pattern as Brownian motion, wherein any low or high is unpredictable. So it's difficult to trade such market. Okay, so I'm erasing off price signature here and then see how it's going to be. So this is the kind of market, guys. So I'm sure many people might have burnt their fingers today because market is very extreme, very volatile and highly unpredictable. Okay. However, if we observe price carefully, we could have opened two wonderful trades in this market picture. Okay, that requires a lot of expertise. Normal expertise will not do. Okay, and I say open a trade, I am not talking about scalping. I am not talking about opening trade any random location, selling here and buying here. I am talking about a professional way of trading, wherein you enter trade with proper entry, proper risk, and proper reward management. Okay, let me show you how that can be achieved using some advanced line work. Okay. So I'm going to show you one trade. The first trade, it's very difficult to trade in the real time, but it's possible. So the first candle here has poked all the lows. I mean, didn't close below this and then went up. There are two back-to-back, aggressive candles, but price did not touch any of these highs. Now there is another candle sudden spike coming from this low. So what this candle has done is this candle has poked many highs at the same time. Okay, so it means that it gives an impression to many retail market traders that the market is going to go very high, closing all the aboves as we anticipated yesterday, but price never closed below this horizontal line. So this line is used as the axis of manipulation by market makers. So since it has poked many highs and but did not close below them, so we can assume that the very next candle can be a short trade idea with this as a stop loss. It's difficult to analyze in the market, but it's possible. So if that is a trade you have chosen, and let us see the proper risk reward ratio management. Okay, so this is the entry for short trade idea. This is the risk, and look at the reward. 1 is to 3.02. So such trades are possible only if we observe price very carefully. Okay, so in real time it's difficult and a lot of emotions play, manipulations are happening, but it's possible if you open such trades with so calculations, market interpretations, and building right context. Okay, this is first trade idea. Now let me show you another trade idea that is possible. Now since market is creating these extremes, okay, I draw a pitchfork, modified skiff pitchfork, to get an angle which market may respect in the near future. So to do that, I'm going to draw a modified pitchfork between the latest highs and lows. This is the latest high, this is the low and the high. Now you see something beautiful here. So market is respecting the midline of the pitchfork very nicely. Okay. Now let us try to build some context around it. There is a low here. Okay. Price clearly closer below this low and then has bounced back. And now price is stopped somewhere here. What could that be? What line could that be? That line is coming out from the inward frequency of this proven solid structure. This is solid structure because price has found a barrier with inward frequency, because these are the sellers who turned this market of buyers into downside by breaking this low, and so this is a solid structure. So price touching an inward frequency of solid structure and creating a bearish fractal bar like this is a very good combination. Now can we enter trade here right away? Possible, yes, but look at the risk here. Okay, we don't know what's the next high going to be. So let us wait and watch that price is now respecting this outline beautifully, and then price again came back here. So should we enter a short trade idea here? Let us also bring in some context of line work. So I'm going to draw some lines here and then see how price is going to behave. Okay, so let me choose these lines A, B, and C. So there is not much happening here. Price is not respecting this pitchfork. But if I draw again a modified skiff pitchfork with the same vectors, okay, now put that in black color. So, and I adjust this pitchfork. Sorry, this is not the correct one. This is the correct one. A, B, and C. Now you see that price is almost respecting the outline of the pitchfork also. Okay, so that could be another entry assumption that price is respecting that pitchfork. Now I'll draw a normal pitchfork also between the latest highs and lows. So this is the low, A, B, and C. So even now you see that the midline of pitchfork is being beautifully respected. So this is second confirmation. Then let's draw pitchfork between the other highs and lows and see if that combination is possible again. So I'm trying to draw pitchfork between another highs. Okay, now you see that the midline of the pitchfork is being respected, but there is some price shift away from the midline of the pitchfork. So what I do is I draw a parallel line to the pitchfork, and then I put that parallel line to the extreme of this shifted price frequency. Now you see that price is now intersecting multiple lines at the same time. The horizontal black frequency line, the shift frequency line, and the red slope line, that is the red inward line of the modified skiff pitchfork. So the triple intersection of the lines. The very intersection of the line, you could have shorted the market. Okay, it's very difficult in the real time to do that, but it's not impossible. So you could have shorted the market at the very touch of this candle, and assuming that there's a stop loss, okay, about this high, and we have entered trade somewhere here with the very touch. So this is the stop loss, short position. This is the stop loss entry. This is the stop loss, and look at the risk reward ratio. So 1:3.6 roughly. So there are two beautiful trades that one could have opened even in such very high risk market, provided ones have a eagle's eye. So ones have that experience to read the price carefully. So this is about this video, guys, and if you're interested to learn these advanced techniques, please do approach us and we could be of great help to you. We train people on price action, market picker strategy, and fractal force strategy, and many other things which is normally not available to a retail trader for analyzing markets. So this is about this video. See you in another video, guys. Bye bye.